Okay, let's get started. Good morning and welcome to today's Tuesday Market Outlook webinar. My name is Prakash Vijayanath. I'm a senior analyst here at Options Play. And today I'm going to be giving you my thoughts and analysis on the current market. So before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by Options Play or solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. So taking a look at our agenda for today, starting off with the major equity indices. We are in the middle of Q3 earnings season, and we do have two very big names announcing earnings today with Google and Microsoft. This will be done at the close. So we do expect some volatility to be created from that, especially this week. Big tech earnings week tends to set the tone for the rest of the earnings season. So all eyes will be on that, but for now, we will take a look at the major indices and see what could happen in different scenarios, depending on the earnings that come out, and also taking into consideration some of the other macro and technical factors. From there, we'll be moving on to fixed income and commodities. We'll take a look at the sector rotational model, highlighting which sectors are outperforming and underperforming the broader market. We'll take a look at a couple of subsectors that I have for you today, and we'll end today's webinar with some bullish and bearish market observations. So starting off here with the S&P 500 using the SPY ETF, and 420, that has been the level that we've spoken about for quite some time. It is a 23.6 fib level, as you can see on the weekly time frame, and it has acted as a major level of resistance in the past, but now it's being tested as support. So far, it does seem to be holding. Given the fact that we are in a very risk-off sentiment, equities do tend to move lower during this period, but we are seeing price actually maintaining above this 420 level still. A few days ago, we had a bounce from 420. And even yesterday, we saw price did have a small intraday bounce from this 420 level, but set to open a little bit higher this morning. Also, we are seeing what I would say, maybe it's a little bit too early to say this, but some positive divergence where the 50-period CCI, which is a blue histogram and measures longer-term momentum, as you can see, it's starting to form a higher low compared to before, and price is actually forming a bit of a lower low already. So if that holds up for the next few days, that's a very bullish indicator. But it doesn't necessarily mean price action would be very bullish in the next few weeks or few months, but it does indicate that we could be towards the end of the last maybe bearish couple of months, really since August was where we started to see a decline here in price for the S&P 500. 420 still holding strong, which is our key level that we are looking at. And with earnings of two big names, Google and Microsoft, like I said earlier today, they will be announced at the close. So that could very well add some volatility here over the next couple of days. So assuming we get good earnings or an upside surprise for Google and Microsoft, I do expect to see the major indices, including the S&P 500, bounce up a little bit higher. There are a lot of factors impacting markets these days. We obviously have the geopolitical tension with Israel and what's happening in Gaza. We also have interest rates, Fed still being quite hawkish, indicating that these elevated interest rates might be here to last. And that's what has initially prompted this decline as well that we've seen in equities. But that may not necessarily be a bad thing. I don't think that anyone really expects interest rates to go back down to close to zero like it did before the pandemic or over the last 10 years. And it only shows that we've only really recovered from the global financial crisis from an interest rate perspective, only now, because pre-2008 interest rates were pretty much at the level that they are currently at. So even though we are still expecting a couple of interest rate cuts for next year, it may not go down or as low as some people are expecting, and that has also prompted a little bit of this bearish price action. But I don't think it's a strong enough reason to see markets decline that much further. So for now, we are still seeing, again, the S&P holding up despite the bearish trend. And let's see if 420 can hold for the next few weeks, because if that level breaks, we have a minor support level at 410, not a very strong support level. And the next major level on the weekly time frame sits all the way at around 380, which is quite a bit of a decline. All right, looking at the Qs, which is the NASDAQ 100 ETF, same price action where we are seeing price bounce from a major support level at around the 350 area. Set to open high this morning, and this will be impacted quite a bit later today or really tomorrow during trading hours with Microsoft and Google earnings. Now, it is looking like it's in a bit of a range, even though price is making lower highs on the daily time frame. In terms of the lows or the swing lows, we are seeing it maintain above that 350 level, which is encouraging. So we could see maybe a bit more of a range here with 370 over the next few days being touched, depending on how tech earnings goes. And, 350 still holding that support level. But for now, the Qs still are slightly outperforming the S&P. And like the S&P, we are seeing higher low so far being generated with momentum. Also, please ignore the crosshair here. When I took the screenshot, I forgot to move the crosshair. So that Monday, 6th of November, has no significance whatsoever. Okay, IWM, the Russell 2000 ETF. So we're looking at small caps here, and small caps still underperforming. That's not new. We've seen this underperformance for quite some time. We saw price breaking below that 170 key area last week. So that is a huge level to break for the downside, because that was also the 50% fib level. However, we do have another support level at 163, which was really the 2022 bottom. We saw price did make a double bottom there and tried to recover. Ultimately, it didn't quite recover past 200, but we are now seeing price once again retest this 163 level, which from there we could see a bounce higher from, given the fact that price has now been oversold or very close to an oversold condition for quite some time. So TLT, we have seen a bounce at a major support level at around 82, 82.50. Strong bullish candle yesterday, but bearish bias remains strong. So look for potential rallies, back to that area, especially between 21 and the 55-day exponential moving average, and look for shorting opportunities there, because TLT, with yields as elevated as they are, the Treasury bond ETF will always have a very limited upside, even when it does rally in the short term. Okay, moving on to the US dollar. So the US dollar has been consolidating for quite a few weeks now, really 3 or 4 weeks. Ever since it broke above this 105.50 level, rallied to around 107, but it's still, even though we have seen a slight decline in momentum, price is still remaining firmly above that 105.50 horizontal support. So it has been confirmed as support. We are seeing bullish price action, and we could see price start to trade at a more tighter range between 107 and 105.50. Obviously, a more hawkish Fed supports a stronger dollar, and a dovish Fed supports a weaker dollar. And for now, we are still seeing a more hawkish Fed, which is why the dollar index is naturally going to have a bit of a tailwind. Okay, taking a look at gold. So gold is a safe haven asset class. We know this, or safe haven asset, I should say. And because of the geopolitical tensions, we have seen an astronomical rise in gold in just a few days, from a heavily oversold condition with the 50-period CCI well below -200 to now approaching an overbought condition within really a space of 2 weeks. Price did manage to rally from 168 all the way to our next key level here at 184. Strong rejection there, as you can see yesterday, or on Friday. A bit of bearish price action yesterday and set to open lower this morning. Now, with the fundamental or the macro factors that are impacting gold tend to really negate the technical levels for a large part. I mean, there's still there's always going to be a higher probability of a price reversal at a key area of support or resistance. But for now, given the fact that there's quite a bit of geopolitical tension, gold as a safe haven has rallied and broken above this 177 area of support quite easily, 180 as well. and is now at this 184 level. It is respecting it so far as resistance, but again, it's difficult to justify a short position in gold when we know that geopolitical tensions are still high. What this could mean, though, is a very short-term bearish position for gold. I'm talking about maybe a couple of days max, a retest of 180. This was a previous area of support and resistance, and from there we could get a bounce higher here for gold. But for gold in the medium to maybe longer term, as long as these geopolitical risks remain, gold will or should also remain elevated. Okay, and taking a look at oil, looking at light crude oil futures. So momentum has definitely declined, no doubt about that, looking at the 50-period CCI, but price is still above this 83 level, which is a major level of resistance, and now really confirming as a strong level of support. Price did manage to rally to 94 after the breakout. It did come back to retest to confirm that as support, but it hasn't quite bounced to those levels yet. Instead, it's respecting the 83 level, but there's a lack of upside momentum to justify that strong bounce. So for now, oil staying above 83, slowly grinding higher. Okay, taking a look at our sector rotational chart, we have 6 sectors in the improving and the leading categories, and we have 5 in the lagging and weakening. So in our leading category, energy losing out on some relative strength against the broader markets and momentum as well, simply due to the fact that oil prices as well have been declining or have lost that momentum. So no surprise to see energy losing out relative to other sectors, but still remaining in the leading category. Communications has now joined the leading category after being in the weakening category for quite some time, and it is improving in terms of relative strength and momentum. And technology as well, doing something similar to communications, where it's rotating from the weakening category right back into this leading category. So technology has been performing quite well lately. It's been quite resilient despite a more hawkish Fed, which is surprising. But at the same time, with technology, we do have a big tech earnings this week, and that could play a huge impact as to where the sector moves to next. We have in our lagging category, staples, real estate, and industrials showing strong rotation out of that improving category. These are pretty weak sectors, and I would even bunch utilities, but with these sectors, because even though utilities is now in the improving category once again, it's really been between the lagging and the improving categories. You have healthcare, so one defensive sector that's actually performing quite well, especially when you compare it to the likes of financials and materials. So financials had a pretty decent earnings season, although that may have been expected given the fact that we are in a higher interest rate environment. So obviously banks do tend to make more loans, and still we haven't really seen it have a big impact here, or a big positive impact on the financial sector as a whole. On materials on the cusp now of joining the lagging category as well. Okay, so taking a look at some sectors or subsectors of interest, and we're going back to energy here. So energy, like I just showed, was in the leading category, but now I do think there's shorting opportunities given the fact that price on the weekly time frame has rejected the 92 level once again, despite the rally. And it does provide a good risk to reward bearish entry point targeting either 86 or even 84. So as long as oil prices, tend to stay quite neutral like they have been in the last few days, even if it slowly grinds higher, the technical level here for energy, this is a major level of resistance. So there's a high probability of a downward move. And really for the next couple of weeks, I would be targeting that 86 area or so. Semiconductors, part of the technology sector. So semiconductors, SMH, a ticker. We have seen price break down a minor level of support at 145, but finding support once again here at 140. So what we're seeing here is a double bottom. Yes, price is still making lower highs, but there is bullish price action at this horizontal level of support and set to open higher this morning. So this does provide a good short-term risk-reward bullish opportunity, targeting this bearish trend line or targeting even 152. And if there is a breakout, we could be looking at around a revisit to 158 to 160, which is a major level of resistance here for semiconductors. So good risk to reward to the upside. But if 140 does break to the downside, that would invalidate our thesis right away. Okay, Electronic Arts, EA. So EA was a bearish play from last week. We saw prices reacting at that 132.50 level. It is also a major level of resistance. And it did provide a good risk to reward bearish opportunity last week. So far, this suggestion is going quite well, targeting that 124 area. As you can see, daily support, daily resistance, it could very well confirm as support once again. So I wouldn't really target past 124. Although if you really wanted to, if you do see an immediate break below 124, 118 would be the next downside target, but definitely at least taking partial profits at around 124 would be the game plan here. Okay, moving on to Qualcomm. Qualcomm was a bearish play from quite a few weeks ago when prices at around 114, 113, and it's also created spread, so it did work out quite well, even though we were targeting a bit more to the downside at around 102. Price didn't quite get there, but again, a credit spread trade structure still benefits from neutral price action, which is what we are seeing here. So price, again, below the 112, 113 area, it's still well within our thesis, but I also think now would be a good time to take profits ahead of the next earnings announcement, which is going to be end October, early November. So United Health, this is a new trade idea, and it's actually going to be a bearish one. Maybe a couple days too late for this, but the reason I'm bearish on United Health is simply due to the fact that price is now at this major area of resistance between 540 and 550. We're seeing bearish price action there. And if we do get a bit of a retracement higher, that would provide a good risk to reward bearish entry point for that move lower, targeting 510. That would be my downside target here for United Health. It is part of the healthcare sector, which isn't necessarily underperforming, but again, the technical levels here have been reached. And in this case, this resistance level so far is holding firm. Okay, our longer term bearish play, IBM, is still going very much according to plan. We've been bearish on this since prices at 150. And at the time, I suggested breaking it down to maybe 2 or 3 trades because our longer term price target would have been around 120. That's the range the price has been trading at now for a few years already. So for that reason, I do think it makes more sense to break it into maybe 3, maybe even 4 trades. Our first trade went quite well. We saw a strong decline to 140, but for retracement higher. And we're now in the middle of the next leg lower. I would say taking profits at around 132, 133 would be ideal. And from there, you can look for retracement higher, followed by another leg lower here for IBM. So far, so good. And this is definitely one that we can milk for a few months. Okay, Comcast was a bullish idea from last week. And price has actually declined, but it's still within our bullish thesis of staying above that 42, 43 area. As you could see, strong intraday bounce yesterday, on Friday, and yesterday still managing to stay above 43 pretty much. So this still provides a good risk to reward bullish entry point. But again, we entered this last week, so we do need to see a move to the upside sooner rather than later. Again, improving momentum with momentum posting a new higher low there. So maybe a bit of patience here is required for Comcast, but if it breaks below 42, that's when we would get out of the trade immediately. Okay, moving on to Ford. So Ford was a long-term bullish play. And the reason it was a long-term bullish play was because price on the weekly time frame is now near a major area of support, multi-year level of support, really. We saw it act as support in 2021 as well, and it has declined back to this level. This provides a good risk reward long opportunity, but again, for an options trade, you need to have timing. Whereas if you're simply purchasing the stock, the timing element is less important, and that's why I suggested this as more of an idea in terms of if you wanted to buy shares of Ford. I think now is a good entry point. Whereas if you were looking for an options trade setup, you'd have to wait for some bullish price action at around this 1150 area before getting that confirmation here for a bullish options trade. That being said, we also have earnings coming up in a few days, so you may want to be wary of that. And a new bullish play for today is Zscaler. So Zscaler, strong bullish trend. And given the fact that markets have been quite bearish lately, this indicates very strong relative performance against the broader market. So I am still looking for bullish trade ideas because, I don't believe this decline is going to last forever for the major indices. And what you want to look at during times of decline is what are the stocks that are actually performing well despite a market decline. Zscaler is one of them. And for that reason, I do think it's a good entry point here because we have a breakout above the 160 area, a retest, and now a bounce higher. So far, set to open higher this morning. Excellent risk reward, bullish opportunity. You could even target the 180 to 190 area. That was a previous swing level here on the weekly time frame. But taking partial profits at around 180, 175 as well would also be a good idea. And with that, that is all I have for you today. Thank you so much for joining me. I hope you all have a great trading week, and I will see you next week, Tuesday, for another market outlook. Goodbye, everyone.